Well, good morning, traders. It is another Monday, and it is Monday, May the 15th, 2023. It's time to look at our past week's performance and take a look into the markets for what we may have on tap for this week's trading. So I really hate to sound like a broken record, but it is deja vu all over again. We have another week of not that many news catalysts, a very range-bound market, IV that is contracting, not expanding, and it's a tough environment. I basically congratulated our trading room last week for the amazing results that we've garnered over the last couple of weeks, because it's not a great environment. If you are a credit trader, absolutely tough to find premium in this marketplace. But we've had a couple of good weeks. We'll talk about that here in just a second. We start off the week every week looking at a bigger technical overview of the marketplace. We're still showing strong buys. On our technical ratings, we go from strong buy to neutral to sell to strong sell. So this is the strongest signal that you're going to get in the marketplace. But man, it's tenuous. It really is tenuous. And, you know, we have areas here in the marketplace that are showing that we are either A, overstretched to the upside, or B, just right there on the edge. You know, if we just had one or two down days, negative days, we could really flip this back to a bearish stance. But so far, the bulls are sort of hanging in there. Now, we will pull this down to a daily picture, which is much closer, I will say, to a neutral rating than a strong buy rating. But still, nevertheless, we're still looking at an overall picture that seems to be bullish at the moment. But boy, you wouldn't think so looking at the price action. And again, there's just, I feel like I'm doing the same sort of report week after week after week. We've just got these levels that we have just tried to break above. We can't break above them. We've got this level down here. I call this the cliff, that has been a very big support level. And granted, this is a pretty wide range, but it's just all chop here at this point. There's no discernible directional bias right now in the marketplace. And this type of setup only lasts so long. We as traders would, much prefer something like this or this. We don't really care if it's up or down, but that directional bias creates some IV and it creates some premium for us to be able to work with as, again, primarily credit traders. At some point, we are going to break out of this range, but I don't know if this is going to be the week. We do have, obviously, the June 1st debt ceiling looming over us. We're actually going to trade that idea today live in our trading room. Got a couple interesting new things that we're adding into the trading room here, and I'll share that with you here as we go through our trades for the last week. But other than that, there's just not a lot of news catalysts on the forefront right now to look at the marketplace. Now, we pull down to a 2-hour chart to start to set up our support resistance levels for each individual day that we start off with our 0 DTE trade. It also helps us with our other trades as well, our 4 DTE trades on the SPY and the Q. I'll give you some of the numbers that I'm looking at for today. They're not very wide and far apart because we don't have a lot of movement to work with. But to the upside, I'm looking at and again, this is on the E-minis, 41.64. To the upside, 41.72, 41.77, 41.84, and last but not least, 41.97. And that would be a big substantive level right there. If we could break up above 4,200, that might be meaningful for the bulls. On the downside, for this would be resistance. On the downside for support, looking at 41.43, 41.32. Again, these levels are not that far apart because we haven't had a lot of movement. 41.24. 41.11, and then last but not least down here is that 4,100 level, and that's a pretty substantive level for the bears. If the bears could break below 4,100, might be able to build a little bit of momentum there. But you can just see on a 2-hour chart. I mean, you know, it looks like there's movement there, but this is on a 2-hour chart. This is a very, very tight range that we have been stuck in for a very long period of time. We look at all of the major indices that we trade, and you know, once again, the Qs continue to outperform. It seems like the techs have, you know, no constraints whatsoever to how high they can go, or do they? Maybe we'll see in just a second here a little bit of weakness that is coming into the techs, and I have made sort of the premise, laid the premise out for the last 3 weeks now, that it is the Qs and primarily the techs that are holding this market up, namely the big five, you know, the fangs, if you will. Those are the stocks that are holding this market up. You'll see the market internals here in just a second and see what I mean. But nevertheless, you've got pretty much everything, even the diamonds, which have not really gone anywhere this year, up above the 200-day moving average. This red line right here is the 200-day moving average, and they're all up above the 200-day moving average, save for the Russell, save for the IWM, and that's been relatively flat. It's been fairly stable. So again, there's not a lot of bearish action going on right now. But I do think that at some point you're going to get a retrace here on the techs. And when you do, it's not if, it's when. It always happens at some point. Nothing goes straight up, nothing goes straight down forever. I think that you're going to see these other indices sort of fall apart. At least that's my premise, that's my belief. And this is one of the primary reasons why I believe that to be the case. You've got pretty much bullish sentiment across all of the major indices, and yet look how many stocks are above or below the 50-day moving average, above or below the 200-day moving average. That's not healthy for a bull market. This should almost be exactly inverted in terms of how much are above and how many are below. That's not a healthy market. Again, we've got a market that I think is being held up by like 5 stocks. So we'll see how that goes going into the future. We did initiate a pairs trade this past week where we went long the IWM and we went short the Qs, and we're pairing those against each other. Again, I just don't see that this marketplace. You've got markets that have essentially been flat. The IWM, the diamonds have gone nowhere this year. SPY's up 8%, but it's been up 8% for 2 months now. It's been treading water for 2 months now. And basically is the same place that it was at the end of January of this year. It was really January that brought all of those gains into the S&P. It's only been the Qs, the NASDAQ, the techs, the 5 big ones, the FANG stocks that are holding this market up. And again, I think at some point we see that resolve. I think we see it resolve to the downside. That's just my feeling. This is another area that I think is interesting this week. We look at the weekly sector rotation. You know, money doesn't usually leave the marketplace. It has to be a really big crash or some dire economic situation for people to actually extract money out of the market. It's usually just a rotational process of maybe they flow it into bonds, maybe they flow it into a different sector, or there's a sector rotation that is continually going on within the marketplace. And I think from last week's numbers here, the thing that I think is interesting is right here. Now you say that's the least movement almost in terms of all of the sectors. What's so important about that? Well, I think this is one of the first times in many weeks now that we've actually seen some weakness come into techs. Now, granted, that's not a lot of weakness, but it's a lot better than we've had as of late, where usually it was the techs that were up here just absolutely blowing higher and higher and higher week after week. So are the techs ready to roll over? I don't know, but this is the first time in a while that we've started to see some weakness in there. We'll look at a heat map in just a second, and you can see that maybe a little bit more from a visual standpoint. Obviously, the banks are still getting beat up, and energy has been continuing to show some weakness here from a lot of the macro geopolitical issues that are going on there. That's important for us because we trade a lot of the banking issues in our ATM investing program. We trade energy with an energy oil ladder strategy set up every single week inside of our live trading room. And we had an amazing week last week. We really needed that week. Came through for us really nicely. This is the heat map from the past week. And again, you know, we didn't really have a lot of movement in the marketplace. So this is kind of what you would expect to see, a little bit of a patchwork sort of setup here. But I do think it's interesting. You know, you start looking at a lot of the names. Amazon, I would not quibble with you if you wanted to throw Amazon into the tech category, although it's obviously consumer cyclicals. But Meta, obviously the banking sector, but a lot of the tech names that have just been, you know, pretty much you can bank on them going up week after week after week. Starting to see some weakness in the tech area now. So will that carry forward this week? We'll have to see. We've got still earnings coming through right now. This week, basically, it's the retailers. We've got Home Depot HD on Tuesday. We've got Target TGT on Wednesday. TJ Maxx TJX is also reporting on Wednesday. BABA reporting on Thursday. That one is interesting. That's one that we have on our list to watch for. And also on Thursday is WMT Walmart. So I don't know how much that's going to really affect. Retail doesn't always necessarily drive the overall market, but we'll see how that plays out. We look at the index performances week over week. This is 2 weeks ago. This was last week. Again, it's just a whole lot of nothing. It's just a whole lot of nothing with, again, the NASDAQ continuing to outperform everything else. We look at the S&P current level today as we're getting started is 4136. And again, we've got this big wall down here at just around that 4,000 to 4,100 level. I think that you're seeing a lot more activity in the puts than anything else. I believe that we are setting up for a opportunity to roll over here. That 4,100 level would be the first level that I would look to see if we could break down below that, though. Key level. Expected moves for the week. Again, I hate to be the bearer of bad news here. I just hate to be the bearer of bad news. Last week was no bueno with about 69 point expected move in the S&P. Sorry, this week is even worse. 63. That is just really, really, really tough to be able to find premium to trade with. It's been really, really tough. We had 5 successful Theta Ferry trades last week. Every day we put money in our pocket off of that trade, but it hasn't been easy. This is a tough week, again, that we're going to be looking at, I'm afraid, in terms of premium. That just means that we need to be creative with our setups. We need to be creative with our scaling and how we put money into the trade, when we put it in, and how much we put in. So we talk a lot about position sizing, but the scaling of that money is going to be almost more important, I believe, this week to being successful with our trading. We look at the expected move for the week, and again, you'll see what I'm talking about here. For this week, we're looking at a 1.1% expected move in the S&P. This is an IV of 14%. It's usually around 30, 25 to 30. It's not good. It's not good. Do you think that we may have a greater than 1.1% potential move between now and Friday. I mean, that's a pretty easy bet to take, right? But nevertheless, this is what is driving the prices of the options that we sell. So you're getting into a risk reward scenario here that's not very favorable for option sellers because you're selling options that are expecting a 1.1% move. I would take the over on the over under bet on that. But anyway, it's all about setups. It's all about setups. We look at the Fear Greed Index. It is a sentiment reading of where we're at in the marketplace. It is a contrarian sentiment reading, and we're still just kind of stuck in this greed area here. It's, you know, you really want to look for something that's extreme greed or extreme fear. And the idea, again, is you want to buy when everybody is fearful. You want to sell when everybody is greedy. We had a moment last week before as well, with the banking sector, when all of a sudden everybody thought every bank out there was going to go bankrupt, and there was some extreme fear. That was a good time. That would have been a good time to pick up some banking stocks, but we're not there right now. We're almost as close to neutral as you can get. Basically, just a lot of ambivalence in the marketplace right now. We look at the potential key news catalysts for the week. There's not a lot. I went through our earnings. We do have retailers reporting this week, and we're going to be watching those closely. We are going to look for maybe a trade in Home Depot HD today in our live trading room. Definitely want to take a look at BABA on Thursday, and maybe even Walmart as well. But not a lot from a news catalyst standpoint. We've got some Fed speak going on today. We've got retail sales and some more Fed speak coming out on Tuesday. Oil inventory numbers, big for us on Wednesday. We trade oil every week. Thursday, nat gas numbers are coming out. We have a nat gas trade on right now. And then Powell does speak on Friday. Probably not going to make a lot of direct comments on interest rates or anything like that. But anytime he speaks, it can be a catalyst to the algos out there to potentially move the market around a little bit. So we'll just see how that goes. But again, not a lot of news catalysts out there for us to work with. We look at our trading activity from the past week, and it was a absolutely stellar week. You know, we have a goal in our trading room of trying to net about 1% a day or 5% a week return. Now, we never, ever hit that on a daily basis. Intraday numbers, it's just too hard to keep track of that. But as the end of the week comes around over the weekend, I do look and say, hey, how close did we get to a 5% return? Some weeks you do better than others, obviously, but this past week was just absolutely spot on. I started our model portfolio last Monday, or last Sunday rather. We start our trading day on Sunday evening with the Theta Ferry trade with about $105,300. That was roughly what my account balance is. And I'm looking at it starting off this morning, and $110,300. I'm looking at my account balance starting off this morning. It's $115,389. So we almost to the penny hit our 5% goal. Now, again, there's no guarantees in that, but I think being able to make 5% in a week in this marketplace was just absolutely phenomenal for us. We have racked up the zero DTE trades. If you know of a better result out there with zero DTEs, man, I'd love to hear about it and find out what the heck they are doing, because we have just absolutely been pouncing on these the last couple of weeks, doing 2 and 3 a day, and they've all been really successful for us so far. We've got 170 total trades, zero DT trades that we've made this year. 165 have been winners, 4 have been losers. We still have 1 rolled open position that expires this week, I believe. So 98% win rate, very happy with that. On our 4 DTE trades, we doubled up this past week. We took them, we put them on Monday. We took them off at a slight profit before CPI numbers came out. We put them back on, and then we crushed it for the second part of the week. One of our better weeks year to date with our 4 DTE trades. Absolutely phenomenal. Tried to shoot for about 10% a week and got close to, I think, 18% on the week for these last iterations. So nice when you can double up like that. Our IWM Millionaire Maker trade, same deal there. We got a double dip last week. You'll see that we've had 20 trading opportunities. We've done 29 trades. Did 2 trades last week. Put it on Monday. Took it off before the CPI numbers, and then we put it back on and came in very close to a 2% return for the week on that. That is our biggest idea. We try to make 1% a week, about 4% a month, almost 50% a year. Doesn't sound like a big deal going from 1% to 2% returns. It's a big deal. It's a big deal. We doubled our best winning IWM trade that we've made this year so far. So solid week there. Pairs trades. We added another couple pairs trades. And so we've got one still open and working. Still working that trade. Probably going to continue to work it for a while with the cash flow component in it. So we might have that one for a while. Bear market trades, didn't add any new bear market trades there. We need to continue to look for those, but I have not found very many good setups for that right now. Stock market millionaire trades. So we did a couple of trades here with our stock millionaire maker setup. We use Netflix right now and PayPal. The Netflix trade has been cash flowing light. We've had trouble with the Netflix trade. We've had to chase it around a little bit over the last little bit. PayPal trade, been absolutely solid. Haven't needed to even double look at it more than once or twice a week. And that's just that inverted this past week. The Netflix trade looks absolutely solid. It's basically raining cash. It just looks absolutely fantastic. And PayPal came out with earnings and it got hit, and then it kept getting hit over and over again. So we're chasing that trade a little bit right now. Looks right now like in the pre-market that it's going to be coming up a little bit and coming back into our range. But we've been having to chase that trade this past week. But so far, so good. They're cash flowing, and that's the main thing. Positive Vega DIA letters. We added another DIA letter, made money on it. It's this trade makes us look like the most amazing traders in the world. Just making 9% return a month after month after month. Solid trade. We'd like to take credit for that, but it's really the fact that the diamonds have basically just been flat on the year. Just, they haven't, it's been an easy trade to set up. Let's put it that way. It has not been a challenging trade for us. We all look like geniuses when your trade does nothing but print money. But when it gets in trouble, that's when you really see the real merit of a trader, right? Scalping was fantastic last week. $687 on Tuesday, and then I hit my $1,000 max profit goal on Thursday very early in the day, and was done for the rest of the day. I will just say this, I'm working with a $100,000 model portfolio. We're trying to, if we had a perfect week, I'm talking perfect week, we would make 5% in the week. So I'd be making $5,000 a week off my $100,000. $1,600 right there. That's a really big chunk. That's a really big part of our weekly intended goal. So scalping is, I think, a critical part of any full-time trader, professional trader, serious trader's arsenal. I think it's just really critical. Dragonflies, we have a BA trade right now. I'm looking at it. It expires this Friday. I put $4,250 into that trade, brought in $321 in income, and that trade is almost fully profitable now. We may take that trade off, de-risk it, book our profit on that today. So that's been fantastic. Theta Fairy. They weren't easy, but we had 5 winners. Starting on last Sunday through Thursday, we had 5 more winners this past week. So we're up to 86 winners and 1 loser. That's been such an amazing trade, such a fantastic trade. You're putting basically 100. This is from the start of the year. That means that basically I've put $8,600 in my pocket and lost $300 there. We're on track with this trade to get to that, sort of $20,000 a year passive income, just sitting on our hands, letting the trade work overnight for us. It is the epitome of passive income, letting your money work for you. It's been a great trade. We love that trade. The gold ladders, we are now 7 weeks in a row. I don't want to jinx us here, but we are 7 weeks in a row of putting money in our pocket from the gold ladders. We have had to chase gold pretty much all year long. And finally, we're getting paid for our patience. So gold ladder, another good successful week last week. We're going to be working that trade again here this morning. Overnight vampires coming up in a couple weeks. We'll have another one of those. Our oil ladder. We needed this. We had a big win on our oil ladder last week after a massive adjustment to the previous ladders. We needed that. We booked a nice win on that, and we will be starting that trade fresh today, putting new ladders in place today. So very good for us with that. The oil ladder has probably the worst win-loss ratio of all of our ladder trades, but it's also the one that pays the highest, so probably makes sense in that aspect. The in-the-money cover trade, we added a couple more of those trades, and they've just been fantastic. They've been absolutely fantastic. Just as a side note, looking at maybe potentially setting up a whole different strategy section for portfolio margin and using in-the-money strategies there. It could really juice the returns there. So that's something to look forward to down the road. Broken wing ladders, butterfly ladders, we didn't do any of those last week. The short portfolio, we're just about done with that. We've just about unwound every position in there. Got a couple still hanging in there, but boy, that was a good setup. Our fly portfolios didn't add any more flies, although we did do a 1 DTE, which I counted its results. I counted that 1 DTE's results from last week into the 0 DTEs. TradingBinaryIdeas.com. This is a new area for us, new section for us. Very excited about this. These are event options. These are event contracts that focus on singular events and binary results. Does this happen or does it not? We are trading a binary trade today in the live trading room on whether or not the U.S. government will default on their debt. Putting a trade together there, and it has almost a 30% return potential on what I think is a really good setup. So very excited to add this added value into what we do in the overall portfolio. Yeah, we're known for our 0 DTE results, but we obviously do a lot more than that. Our ATM program, that's our investing program, Asymmetric Trading Method. We had a couple of days that were a little scary there when all of the banks were crashing. But nevertheless, we're still meeting our objectives. Beat the market on an annual basis as measured by the S&P 500. Do it at less risk, less volatility. We didn't have less volatility in the portfolio during those 2 days, but overall, we've been at about 40% less volatility in our portfolio than the overall market. And we're still crushing the market, 12.2% up year to date versus the market's 8%. Percentage-wise, we're just kicking the market's butt. I don't know what to say. It's been fantastic. So again, we'll have an updated chart for you here on our ATM results at the end of May. But if you're an investor, if you have mutual funds or index funds or retirement accounts or things like that, you're not trading them, but you're investing in them. And that the ATM program, you got to take a look at it. I really think it's an awesome approach to passive investing. If you want to come trade with us, you can do so. You can go to try0dteforfree.com. We'd love to have you as part of our program. We have a 200% money back guarantee. Never had to honor that, because if you go through the training, if you follow our steps, if you do your daily check-ins with me, your results are impressive enough that you're going to stick with it. But it does take work. It does take effort. We want people that are serious. If you're looking for more investing approach, you can go to tryastforfree.com. That's where we're focusing on investing passively, better returns, less volatility. That's our goal there. If you want to come scalp with us on Tuesdays and Thursdays, you can go to tryscalpingnow.com. Would have put about $1,600 in your pocket this past week had you been on board with us on Tuesday and Thursday. Again, no guarantees, but it's always a good opportunity to put $500 to $1,000 per day in your pocket. Other than that, guys, appreciate all of you. Appreciate all of your support. Hope you all had a good Mother's Day weekend. I was blessed to be able to still have my mom around, be close to her. Our family got together. It was nice. So hopefully you guys had a good weekend, and hopefully you have a good week in the market this week. Be safe out there, and we'll talk to you soon.